Bang.
So we had a lot of theory today, and I think everybody's kind of tired, so I'm afraid I have a bit of theory as well, but I'll try to race through that and tell some stories instead of theory at the end of my presentation. I want to start with a positive message. When I started in this area as a solar cell researcher in the 90s, it was all a bit gloom and doom. There was a lot of negativity on sort of the fate of the world, if you want, driven by all these issues. That has changed, and what has changed is innovation came in to solve all these problems. So I'm now much more optimistic that we will achieve sustainability through innovation. Now, that is also the theme of our investment strategy. So it's a simple idea. If you want to be sustainable, you will need innovation on an ongoing basis. Sustainability, of course, everybody kind of knows what that is. It may be worth pointing out the last point here, this idea of caring for assets, reusing assets. That's an idea we saw emerging over the last years quite strongly, and it's an important third idea, if you want, in this theme. On the innovation side, obviously there's a lot, and we saw some today. The way we think about it is in 3 buckets: smart cities, smart energy, and smart industry. We categorize it that way because we believe in these 3 areas we have big paradigm shifts happening. In smart cities, broadly speaking, it's the city's assets that get interconnected, and that enables lots of efficiencies, but also quality of life improvements. On the energy side, we heard a lot about that. For me, in a nutshell, it's about new sources of power and intelligence in the distribution and use of that energy. A more recent paradigm shift is in industry, where we see the advent of what people like to call cyber-physical systems. So it's the idea that the cyberspace and the physical space get intertwined so much that you go far beyond traditional automation, which then will enable things at a simple scale like mass customization, for example. But if you follow that through, you get rid of traditional factories altogether. So really exciting new trend here. Another trend that's often forgotten in the industrial space is I used to be a material scientist in the 90s, and people didn't really know what that was. You had chemists and you had physicists and so on, and material science was new. Material science really has come of age, and it's now entered the commercial space, and it really is revolutionizing a lot of industrial areas. So if you want, there are 2 big trends in the industrial space that have become visible over the last years. So 3 areas with paradigm shifts, which we focus on. Lots of shaking up of the old ways, lots of entrepreneurial opportunities. So really exciting time for us, and I think really a positive message, actually, especially with regards to that whole sustainability theme. Before I go into more theory on that, I thought I'd briefly talk about ETF. We've been around for quite some time, so we've been to the first Ecosummits and been a regular attendee since. We're doing what people might want to call growth capital or later stage venture, based in London, but we really take internationality very seriously. So of our 13 people, we have 9 nationalities, invest all over Europe and the UK. And what we like to see in companies is kind of what everybody likes to see, but we really focus on these areas. So we want to see growth of revenues. So pre-revenue wouldn't qualify in our current strategy. We want to see real competitive advantage. And that's kind of an important point. There's lots of cool technology out there, but for us, it's really about seeing that in the financial metrics and seeing that can be defensible in the very long term, because that's how you create the value. Large market opportunity, great team. Of course, everybody likes that. We're quite happy to help build a great team as well, so we don't need that from the start. And that brings me to what we can provide. Well, we have a big network. We have been in the market for a long time. We have some special angle if you want. We have a financial fund, the financial investors invest in us, but we have a small group of corporations that we work very closely with, so we extend into the corporate world if you want. Lots of situational experience we bring to bear, and that brings me to my last point. We really try to work hard for our portfolio companies. Everybody kind of solves problems, and we've always done that because portfolio companies tend to have issues with refinancing and so on, and that's certainly our duty to help there. But what we're trying to emphasize, and it requires some discipline as you want, is to take the good companies and make them great. So really put lots of effort into making great stories out of good stories. That brings me to the case studies. I thought I'd talk about 3 companies out of our portfolio, which show these sustainability trends as well as how we work with companies. First one is from the smart cities area. This is a company that has what's called a low power wide area communication protocol. So the type of IoT network you would want in smart cities. They have a proprietary one. They in fact have the biggest deployment in the world for this sort of thing. So they have by far the most connected streetlights in the world. It's a company called Telensa. Nobody's ever heard of it. There's Sigfox and others which people may know. Telensa is actually more deployed than those guys. The reason nobody heard about it is because until recently, about 12 months ago when we invested, it was part of a larger organization called Plextech, which is a consultancy, essentially a technology consultancy, which was growing this company up to 8 million revenues when we invested. So it was a sizable company, but it wasn't actually a standalone company. So we put a lot of work into spinning it out of Plextech, shaping up the team, shaping up the organization, and really setting it up for unhindered growth as a standalone company. That's worked very well. So we're on track to doubling the company. And as I mentioned, it's just about a year ago that we invested. On the smart industry side, I mentioned materials. Here's a great example of really quirky, unusual material science. So these guys are taking leather fibers. They're mixing them with a little bit of synthetic fibers, really just a few %. And what that creates is a composite leather. So it's the equivalent to, say, a carbon composite, but in the leather space. It's a high-performing material, which the airline industry, for example, loves because it's thinner, it's more durable, it's fire-resistant, and so on and so on. But it smells, feels, looks like leather, so people like this. The company had double-digit revenues when we invested about 2 years ago. It's since doubled, but it's been growing sort of steadily, if you want. We now see that some of the very large leather users, so people that literally buy hundreds of millions worth of leather, that they want to switch part of their procurement to e-leather. So we're now having the strange situation where we kind of need to build a factory for a single customer. And that's a lot of work. So that's the kind of thing where we as ETF get involved. And I spent 2 days at the company last week just to work through the plans here, because obviously there's a lot of organizational things to do, CapEx to think through, investment, and so on and so on. The last story is a story about exiting. This is a company we invested in, I think, about 5 years ago. We were the first and only institutional investor. The company was bootstrapped up to about 20 million revenues at the time. We put a pretty chunky investment in there of 10 million euros. Why did they take the money at the time? They were profitable. Well, there was a French company. It was a market leader in sustainability performance monitoring. You can see some of the customers here on the slide. But it was actually mainly based in Europe and France, and in order to really create value, we felt you have to go to the US. Any good software company eventually has to go to the US. So we invested and we helped them do that. When we sold the company a few months ago, the company derived more than half of its revenues from the US. And we're very happy about this story. The management's very happy. And I think it's an encouraging story of a software company out of Europe being able to become what is really a global leader in its space. With that, I thought I finish and let everybody go to the beers. This is our entire portfolio, so over a drink I'm happy to talk about a few more case studies from our portfolio. Thanks very much.